Silver had a rough start to the week, and stackers across the country noticed right away. The price closed out last week just above $60 an ounce. That calm didn't last. By Monday morning, silver had already dropped again, falling more than $1.60, a decline of nearly 3% in a single session. For anyone watching closely, this wasn't a total shock. It was simply the latest move in a pattern that has defined the silver market for months now. Anyone who looks at a 3-month chart of silver prices can see the story clearly. The swings have been dramatic. Prices have climbed as high as the upper 80s and dropped as low as the mid-50s. That kind of movement, up and down within just a few months, tells people this market is anything but calm. It's volatile, and that volatility is exactly what's shaping how people are buying right now. Here's the part many casual observers miss. Even though silver has fallen to roughly half of where it stood back in late January, that drop hasn't scared buyers away. If anything, it's done the opposite. Lower prices have pulled more people back into the market. Coin shop owners are reporting steady foot traffic, and phones are ringing with buyers asking the same basic question: what should I be buying right now? But according to shop owners on the ground, the real story isn't whether people are buying, it's what they're choosing to buy. And that answer might surprise longtime stackers. Josh, a coin shop owner who's been in the trenches watching real customer behavior day after day, shared what he's actually seeing across his counter. Despite prices being historically low, one theme keeps repeating itself. Customers want low premiums. They're not interested in paying extra for a name or a brand. They want the most silver for the least amount of money over spot price. That single detail is reshaping which products move fastest. American silver eagles, long considered the gold standard of silver coins in the United States, are sitting on shelves longer than usual. This is happening even though premiums on eagles are, historically speaking, quite low right now. Logic would suggest that should make them more attractive. Instead, buyers are gravitating towards something simpler. Generic 999 fine silver rounds and bars, sold for just a small amount over spot price. 90% silver, often called junk silver by collectors, is also performing well, but for a very specific reason. Shops like Josh's are selling it under spot price, making it one of the cheapest ways to own real silver right now. Customers are responding to that price point directly. What ties all of this together is one simple idea. People aren't chasing brand names anymore, they're chasing value. Even though spot prices have dropped significantly over the past 5.5 months, buyers are still hunting for the lowest possible premium above that price. Many analysts would call this smart, disciplined buying behavior, especially during uncertain times. Still, it raises an interesting question. Why would buyers pass over government-issued coins like eagles and maple leafs? Coins that carry guaranteed weight, purity, and recognition worldwide, especially when their premiums have already come down. That's the puzzle shop owners are trying to understand in real time, and it says a lot about how today's buyers think differently than stackers did just a few years ago. This shift didn't happen overnight. It's been building slowly, shaped by rising prices, falling prices, and a market that refuses to sit still. What's clear is that buyers today are more price conscious, more cautious, and more focused on maximizing every single dollar they spend on silver. To understand why buyers are behaving this way, it helps to look closer at premiums, the extra amount people pay above the spot price of silver. Right now, premiums on eagles and maple leafs sit at historically low levels. On paper, that should make these coins more appealing than ever. A lower premium usually means a smarter purchase. Yet shop owners like Josh say that logic hasn't translated into more sales. When asked directly why government-issued coins aren't picking up despite cheaper premiums, Josh gave a simple answer. Buyers, in his experience, just aren't connecting the dots. Even though the math favors buying now, many customers still walk past eagles and maple leafs without a second glance. Instead, they head straight for plain, unbranded silver. This pattern becomes even clearer when looking at 90% silver, sometimes called junk silver by collectors. This type of silver comes from old U.S. coins, dimes, quarters, and half dollars, minted before 1965, made of 90% silver and 10% copper. Because shops are currently selling this silver under spot price, it has become one of the cheapest ways to own real silver today. Still, Josh admits that if 90% silver carried the same premium as generic rounds, most buyers would choose the rounds instead. The reason comes down to something surprisingly simple: math. Figuring out exactly how much silver sits inside a single silver quarter or half dollar takes a bit of calculation. For newer stackers who haven't done this before, that extra step feels confusing or even intimidating. Compare that to buying a 1-ounce round or a 10-ounce bar. There's no guesswork involved. A buyer knows exactly how much silver they're holding the moment they pick it up. That clarity matters more than people might expect, especially for those just entering the market. As Josh explained, when customers ask what they should buy, he often mentions 90% silver as a smart, low-cost option. Just as often, buyers respond by asking for the cheapest, pure silver instead. This isn't just about confusion, though. It's also about memory. A few years back, premiums on 90% silver were extremely high, in some cases nearly double spot price. Buyers who purchased during that period paid a steep cost. Now that prices have dropped and shops are selling under spot, sellers trying to cash out that same silver face a tough reality. They can't come close to recovering what they originally paid. That kind of swing, paying a high premium and later selling for far less, has left a lasting impression on many buyers, according to Josh. Because 90% silver isn't selling at the counter the way it once did. Dealers are seeing large amounts of it being melted down instead. Josh describes this as part of a natural cycle. When demand for a particular type of silver drops, more of it tends to get melted rather than resold, which slowly shrinks the overall supply. Fewer coins in circulation eventually means higher prices whenever demand returns, and Josh believes that return is likely, even if it isn't happening right now. Meanwhile, the difference in buy-sell spreads tells its own story. On generic rounds, many dealers are buying at $5 under spot and selling at $1 over spot, a $6 spread. On 90% silver, some shops are paying as much as $9 under spot while selling at $4 under spot, a smaller $5 spread overall. It's a detail few casual buyers notice, but it directly shapes which products dealers are eager to move. None of this happens by accident. It reflects a market still adjusting to sharp price swings, cautious buyers protecting their money, and shop owners doing their best to keep both sides of the counter fair. Understanding these rules, premiums, spreads, and the true value hidden inside older coins, gives everyday viewers a clearer picture of why the silver market looks the way it does today. The choices buyers are making today carry consequences that reach far beyond a single coin shop counter. When large amounts of 90% silver get melted down instead of resold, the overall supply of these older coins shrinks. Every quarter, dime, or half dollar that goes into a furnace disappears from circulation permanently. Over time, this steady melting means fewer of these coins remain available for future buyers, collectors, and even everyday people who simply want a piece of history in their pocket. Josh believes this shrinking supply won't stay unnoticed forever. As fewer 90% silver coins circulate, scarcity naturally increases. When that happens, prices and premiums tend to rise again. Buyers who once walked away from junk silver because the math felt confusing may find themselves paying much more for the exact same coins a few years from now. It's a cycle the market has lived through before, and many analysts expect it to repeat again. This shift also affects newer stackers differently than experienced ones. Longtime collectors often already understand the value hidden inside 90% silver, and many continue adding it to their holdings, regardless of short-term trends. Josh himself says he still buys 90% silver personally, even while acknowledging why some customers avoid it. For newer buyers, though, the added complexity of calculating melt value can feel like an unnecessary obstacle, especially when generic silver rounds offer a simpler, more straightforward option. This growing preference for plain, low-premium silver says something important about buyer psychology. People today appear less interested in prestige or brand recognition and more focused on transparency and simplicity. A round or bar clearly states its weight and purity. There's no interpretation required. In a market defined by sharp price swings, many buyers seem to be choosing the option that removes as much uncertainty as possible. At the same time, this trend creates a noticeable gap between everyday bullion and specialty or collectible silver. While generic rounds and bars remain steady sellers, certain collectible coins are seeing the opposite effect, with demand climbing sharply. Items like the Mexican Libertad, for example, have become difficult for some shops to keep in stock. Josh describes situations where he can send a single photo of a Libertad to a customer, and the coin sells before the day even ends. This growing appetite for select collectible coins highlights an important balance forming in the market. On one side, everyday buyers want simple, low-cost silver they can easily understand and stack. On the other side, a separate group of buyers is chasing rarity, craftsmanship, and long-term collectible value, willing to pay significant premiums for coins they believe will hold or increase in worth over time. There's also a financial reality shaping seller behavior. When people need cash quickly, Josh explained that they typically choose to sell their highest premium items first, rather than plain silver rounds. A collectible coin, even sold below its full retail value, still returns more money per ounce than a generic round sold just a few dollars under spot. This means collectible and semi-numismatic silver often moves out of private collections and back into shop inventories first, while plain bullion tends to stay put longer. Taken together, these patterns paint a picture of a market in transition. Buyers are becoming more price-conscious and cautious with everyday silver, while simultaneously showing stronger interest in select collectible pieces that offer both scarcity and visual appeal. Dealers are adjusting their inventory and pricing strategies to match these shifting preferences, buying premium items aggressively while offering slimmer margins on standard products. For everyday viewers, this matters because it reflects broader confidence or caution in the wider economy. When people prioritize low-cost, easily understood silver, it often signals a desire for financial safety without added complexity. When interest in rare or collectible coins rises at the same time, it suggests some buyers are also looking toward long-term value beyond simple ounce-for-ounce pricing. So where does this leave everyday stackers and collectors watching the silver market right now? The answer isn't simple, but a few key developments on the horizon may offer some clarity in the coming weeks. The most immediate event to watch is the U.S. Mint's new half-ounce silver medal, set for release this Thursday, July 16th. Alongside it, a gold version of the same metal will also launch, carrying a notably high price point. Both items are expected to have extremely limited mintages, which historically has driven strong demand on the secondary market. Shop owners and wholesale dealers are already positioning themselves ahead of the release, with some large buyers reportedly offering to pay well above the Mint's original price just to secure committed orders in advance. This isn't happening in isolation. It echoes a similar pattern seen earlier this year with a set of collectible quarters that carried no silver content at all, yet sold for hundreds of dollars above face value due to limited supply and strong demand. If that pattern repeats with this week's silver and gold medals, it could offer a clear signal about just how strong collector appetite remains, even during a period of falling spot prices. Viewers should ask themselves an important question while watching this unfold. Does rising interest in limited mintage collectibles suggest confidence in silver's long-term value? Or does it simply reflect short-term excitement around scarcity? There's no single right answer, and reasonable people can view it differently. Some see it as a sign that collectors are looking past current price swings toward long-term worth. Others see it as a reminder that hype and rarity can sometimes drive prices higher than practical value would suggest. For those focused less on collectibles and more on traditional stacking, the 90% silver cycle described earlier remains worth watching closely. As melting continues and older coins gradually disappear from circulation, premiums on this type of silver are widely expected to rise again over time. Buyers interested in 90% silver may want to pay attention to how quickly or slowly that shift begins to show up at their local coin shops. There are a few practical steps viewers can take to stay informed and make confident decisions moving forward. First, understanding the melt value of 90% silver coins can remove much of the confusion newer stackers often face. Several free tools and calculators exist online specifically for this purpose, making it easy to know exactly how much silver sits inside any given coin. Second, comparing buy-sell spreads across different local shops can help buyers and sellers understand whether they're getting a fair deal on any particular product. And third, keeping an eye on limited mintage government releases, like this week's Liberty Bell medals, can offer useful insight into where collector demand is heading next. It's also worth remembering that market volatility, while sometimes unsettling, isn't unusual for silver. Sharp price swings have shaped this market for decades, and both buyers and sellers who stay informed tend to navigate those swings with far more confidence than those reacting purely on emotion. As this story continues to develop, viewers are encouraged to share their own thoughts in the comments. Are they leaning towards simple, low-premium silver right now? Or are they drawn toward collectible pieces with stronger long-term appeal? Every stacker's strategy looks a little different, and hearing real experiences from the community often provides more insight than any single report can offer alone. Silver's story is far from finished. Prices will keep moving, premiums will keep shifting, and buyer behavior will likely continue evolving alongside them. What remains constant is the importance of understanding exactly what you're buying, why you're buying it, and how it fits into your own long-term goals. Thank you for spending this time with Golden Crest Finance. If this breakdown helped to bring clarity to a confusing market, consider subscribing so future updates reach you first. And as always, stay informed, stay patient, and stay one step ahead of the market.